Bad news for the job market. You might want to start polishing your resume because things are about to get tough for job seekers in the near future. Hey everyone, the job market is looking increasingly grim, with new data showing that even though job openings are high, the effects it has on the economy are bad. Inflation and rising prices are making it difficult for businesses to keep up with growth, and this is leading to job cuts and hiring freezes. So what does this mean for you? Well, if you're currently employed, you might want to start looking for new opportunities. And if you're unemployed, you might want to start polishing your resume and networking like crazy, because the competition is only going to get tougher. The Bureau of Labor releases a monthly jobs report, which always spurs a wave of different analysis. After that, an onslaught of editorializing, finger-pointing, credit-grabbing, and all other manners of conversation begins, ranging from clear and objective reporting to something of less quality. The economy added 261,000 new jobs in the month of October. Some experts find this disappointing, pointing to the monthly pace of 562,000 for the entirety of 2021 and the first 3 months of 2022. One expert describes our current state as sputtering. Early in 2021, as the rollout of COVID-19 vaccines began and the economy began to reopen more generally, a rise in the number of job opportunities was seen. Workers were able to resign their positions in order to pursue other chances in an environment where there was an abundance of job advertisements and firms fought for talent by raising pay. This pattern of job hopping became widely recognized as the Great Resignation in recent years. Now, it seems that the Great Resignation has come to a halt as the economy has failed to meet expectations in terms of job creation. This could have a number of different explanations, ranging from the pandemic to political uncertainty. Whatever the reason, it is clear that the economy is not yet out of the woods, and that more needs to be done in order to spur job growth. According to the Job Openings and Labor Turnover Survey conducted by the United States Department of Labor, the number of workers who voluntarily resigned from their jobs increased by 100,000 from July to August, bringing the total to roughly 4.2 million. Quits are an indicator of worker confidence and sentiment, and since there was a minor increase in the number of resignations while they remained at a historically high level, it suggests that workers continue to be in control. According to economists, the majority of workers who quit their occupations do so in order to find new employment elsewhere. According to the Federal Reserve Bank of Atlanta, those who move jobs often receive a larger pay increase than those who remain in their present positions. In August, job switchers received a 7% annual salary increase, while those who remained in their current roles received a 5% raise. As a result of firms' efforts to retain the employees they already have, layoffs have remained relatively low and have only mildly increased, according to economists. Labor experts say that despite this, the number of job postings is still very high when compared to historical norms, which indicates that employees have plenty of opportunities. Before the epidemic, openings were consistently around 7 million, but they reached a high of about 11.9 million in March of 2022. Labor analysts say that despite the fact that there are indicators that the red-hot job market is beginning to cool, employees still have the power to bargain for the time being. This can be attributed to the Federal Reserve, which is increasing the cost of borrowing money for both consumers and businesses in order to slow down the economy in the United States and bring inflation under control. The officials of the central bank are holding out hope that a slowdown in the labor market will result in a slower rate of wage rise. Wage growth has been running at its fastest pace in decades, which contributes to inflation. When inflation starts to rise, it has a number of effects on job opportunities. The most direct impact is that since companies have to pay more for goods and services, they start to lay off employees or freeze hiring. This in turn leads to fewer people having jobs and more people competition for the available positions. The second effect of inflation on job opportunities is that it causes people's wages to decrease in real terms. Even if someone keeps their job during periods of high inflation, their purchasing power declines because their salaries don't keep up with the rising prices. This can eventually lead to stagnation and even decline in certain sectors as workers are increasingly unable to afford goods and services. Finally, inflation can have negative impacts on whole economies as investors lose confidence and pull back on funding projects or businesses. All of these factors create an environment where there are fewer jobs available overall, which competes against individuals looking for work. Despite the fact that 261,000 is the lowest figure in the past 22 months, it would have ranked in the top 15% of the total previous decade's total of 120 months. For instance, those 261,000 jobs were created despite the fact that the civilian labor force, the number of people who are either working or looking for work, actually decreased by 22,000 people, and the civilian non-institutional population, the number of people who are of working age, grew by only 179,000 at a rate of only 83% compared to the previous year. In other words, the job market nevertheless put up a huge number, despite the fact that population growth is slowing and there is a declining workforce. This comes on the heels of 21 straight big numbers since January 2021. Another issue is the unemployment rate. Over the previous month, it increased by 0.2%, up from 3.5%. The following are some of the problems with the criticism that ensued. 1. 3.7% is still historically so low that it is considered full employment, and then some. 2. It is a 1-month number. 3. Unemployment rates can fluctuate as a reaction to many different things, such as hires and layoffs, and the interplay of all those factors. It is virtually probable that there will be an increase in the unemployment rate given the current circumstances, which include a slightly growing population and a very slightly shrinking labor force. After that, we should ask the proper questions by elevating ourselves above the statistics. What were the circumstances that allowed for this to be accomplished? And what are they currently? Which forces were at play, or are still at play? As a result of the confluence of powerful influences on the job market, which include supply chain emergencies, climate urgency, rampant viruses, and other issues, the job market created 6,743,000 jobs last year, which was by far the most in history, and it is poised to add 4,500,000 jobs this year, which will turn out to be the number that will turn out to be the second highest in history. Just think about it, 2 months in a row that rank among the best in history. As if all those headwinds weren't enough, the Federal Reserve is going to raise interest rates again this year. The labor market has been resistant to decline despite a multitude of natural and man-made calamities, and now even fiscal policy doesn't have the desired effect. That not only speaks to the health and complexity of the job market, but that it also supports the argument that it is the job market that has been keeping the whole economy from sliding into a full-scale recession. How long that can last, that is another question entirely. The job market is still very strong despite some recent slowdown. Workers are in a good position to bargain for better wages and conditions, and there are still plenty of job opportunities available. However, the future is uncertain, and it remains to be seen how long the current situation can last. Inflation is still rampant, and the Fed is likely to raise interest rates again this year. What are your thoughts on the job market currently? Tell me in the comments section below. Additionally, if you're new to this channel, I strongly encourage you to subscribe and click the like button. You can also keep up with all of my most recent videos. See you in the next one.